What's good, everybody? It's C from The Mask, and if you're just getting started with trading, let me tell you, discipline is everything. You can have the best strategy in the world, but without discipline, you're just throwing your money into a bottomless pit. In this video, I'm going to share 10 simple ways to stay disciplined as a trader, especially if you're still new and figuring things out. Stick around to the end because I got a discipline checklist you can use every day to stay on track. So let's get right into it. Number 1, build a daily routine. Discipline starts before you even open a chart. Set up a daily routine around the time you get on the charts. Decide when you analyze the markets, when you trade, and when you stop. Even things like making coffee, stretching, or reviewing your plan first can create the right headspace. The more structured your day is, the less room there is for emotional or impulsive decisions, especially around the times when you're at the charts. Number 2, have a written trading plan. You need a concrete plan to help you. Something that tells you exactly what to do and how to do it. Like, what pairs are you trading? What does your setup look like? When do you enter? When do you get out? How much are you risking? What's your risk-reward ratio? Write all of it down and then follow it. Your plan is your boss in the market. Do not trade off vibes alone. The market is cold and calculated, and as you probably know, it's mostly operated by bankers and computers. So to keep up with them, you need to be just as calculated and take things seriously. Number 3, use stop losses and risk limits. Never enter a trade without a stop loss, ever. This doesn't necessarily mean you need a concrete stop loss set, but if you're pretty disciplined already and can trust yourself to actually get out of the trade manually, a mental stop is fine. However, if you find yourself continually holding losers way past their due, you need to set an actual stop loss. You should also only risk a small percentage of your account per trade. 1 to 2% is a pretty good rule. This protects your account from most emotional decisions and helps you last long enough to actually learn and grow. Number 4, journal every trade. This one is pretty big, so after every trade, write down what setup you took, why you took it, how you felt during it, and what the outcome was. The more information, the better. Reviewing this often helps you spot patterns, both good and bad ones, and keeps you accountable. And accountability is your biggest incentive to build discipline. Another way to hold yourself accountable is to find a mentor that you can engage with and trust, but not for the reasons that you think. This mentor isn't about teaching you a strategy or telling you what to do. He's simply there to tell you when you're making mistakes and to tell you that you're doing well when you are doing well. If you're looking for just such a mentor, you can join the free Discord down below in the description or join the mentorship program in that same Discord. Number 5, avoid overtrading. Taking too many trades is a beginner's trap. It's usually driven by boredom, FOMO, or greed. Set a max number of trades per day or week, depending on your strategy, and this number should be realistic but not excessive. Only take high-quality setups that match your trading plan. No guessing and no chasing. The last step we covered, journaling, will help you find exactly what setups and trades are good and which ones are not. This is the step where you actually use that to improve your trading. And remember, sometimes the best trade is no trade at all. There's no point throwing your hard-earned money at poor market conditions. If the market isn't giving you what you need or want to see, simply wait for another time. The markets are not going anywhere. Trust me. Number 6, take regular breaks. Staring at charts for hours leads to emotional fatigue. Regardless of how patient you are, you will get tired eventually. Get up, take breaks, step away, and recharge. Even after placing a trade, sometimes it's best to just walk away. Let it play out because you don't need to babysit your candles. Number 7, learn to detach from wins and losses. Here's a truth a lot of beginners don't often consider. Good trades can lose money, and bad trades can make money. It's similar to how every thumb is a finger, but not every finger is a thumb. Not every profitable trade is actually good, and not every losing trade was actually bad. Don't get emotionally attached to the outcomes of your trades. Instead, focus on execution, because all that matters in the long term is taking good trades and avoiding bad ones. If you followed your plan correctly, it was a good trade, period. Number 8, start small or use a demo account. If you're still learning and unsure about your system, use a demo account or trade with a very small balance. It's easier to stay calm and disciplined when you're not emotionally attached to the money. If you're putting your rent money on the line to learn a strategy you just saw in a video 15 minutes ago, you are doing it very wrong and will not be doing that for very long. Look at that, I'm basically Eminem. The less pressure you put on yourself during the learning process, the better your results you'll be able to attract. Number 9, have a system of accountability. Discipline improves when someone's watching. It's simple peer pressure. Find a trading community, a mentor, or even just document your trades online on a channel such as this one. And who knows, maybe it becomes another source of income for you as well. Sharing your process keeps you focused and less likely to make dumb moves. Though you do have to be careful, as it can also make you more likely to get attached to outcomes when you look for praise or want to avoid judgment. Number 10, and lastly, reward discipline, not just profits. Don't just celebrate winning trades. Celebrate disciplined trades. Did you follow your plan today? Did you avoid FOMO? Did you stick to your risk? Did you journal your trade? If so, give yourself credit, even if the trade was a loser. Again, not every losing trade is a bad decision. So if you followed your plan and system correctly, reward yourself regardless of the outcome of the trade. Having something like this reward to look forward to when correctly adhering to your plan may make you more likely to build a habit out of it. I know staying disciplined isn't easy, but it's exactly what separates profitable traders from those that crash and burn. Use these tips to stay grounded, stay consistent, and protect your capital. And here's that quick discipline checklist I promised you earlier that you can use before and after each trading session. Number 1, did I follow my plan? Number 2, did I risk the right amount? Number 3, did I avoid emotional trades? Number 4, did I journal my trade? And number 5, did I take necessary breaks? If you found this video helpful, please like, subscribe, and let me know in the comments what the hardest part of staying disciplined is for you. That's about all I have for you today, and I'll see you in the next one.